welcome to our ACE 240 Intro to Personal Finance and Financial Planning Instructor Showdown. Professor Craig Lemoine here in the right corner, Professor Donovan Sanchez in the left corner. We both teach ACE 240 class, and we're here shooting a podcast, so I thought we'd go ahead and knock this out and have a good time together. All right, Donovan, credit cards, love them, hate them. How do we use them wisely?
Yeah, so I mean, I think that, credit cards are kind of good, bad, neutral, really. It has everything to do with how you spend them. The challenge here is that I think that the average credit card debt in the United States, based on Q1 2025, is over $7,000. That's a lot of money to have on a balance, especially if you think about average interest rates on credit cards being north of 20%, right? Having credit card debt is a problem.
Yes.
And I really think, if we're kind of arranging our lives and thinking about things to tackle first, if we have high interest debt, that's one of the first things that we need to do. I would put it above saving for retirement. I would certainly put it above some sort of like tinkering with your investment portfolio. Maybe get yourself a little bit of a, as Dave Ramsey would say, baby emergency fund. But really, we need to prioritize getting out of credit card debt. So again, good or bad, right? Managing a credit card well means that you're paying it off every month. Research does suggest that if you swipe that card, you're probably more likely to spend it than if you were to pay in cash. But not many of us these days are walking around with big wads of cash in our pockets. And so most people are going to use a card of some sort, right? Whether it's a debit card or whether it's a credit card. Again, responsibly using the credit card means that you're paying it off every month. You're not carrying a balance. If you're having a hard time doing that, I think it is a good idea to put the pause on using credit cards, at least for a time being. Make sure that you get that debt paid off. And then maybe if at some point in the future you can use it responsibly, maybe go for round 2, right? I don't know. Those are my thoughts off the cuff. What do you think, Craig?
What do you think? What do I think about credit cards?
What do you think?
Convenience, not credit.
I love it.
All right, that's my sentence. Convenience, not credit. It's a convenient way to spend, and it's a safe way to spend compared to debit cards and cash. You have more consumer protections in the back end, but we should use it for convenience. We should not use it for credit. We should not rack up a balance if at all possible. And I think budgeting has a lot to do with that. I also think that if we do start racking up a balance, it's better than your 401k match. It's better than a lot of things out there to start paying those down because at 24% compounding, you're just going to get hammered. It's not going anywhere. That's what I think.
I think those are good thoughts, and you are much better at being parsimonious than I am. I need to work on that. So here's my question for you. Imagine that you're in a class and a student comes up to you after the class and they say, Dr. Lemoine, I'm going to be graduating in the next month. What is the first or the most important thing that I should do following graduation from a financial perspective?
All right. Following graduation from a financial perspective, I think I would answer that with some questions about, are they on the job market? Have they had an internship? And where are we at as far as interviewing and our resume? Do we have a plan on where we're going to live, where we're going to go? I think the takeaway would be, let's look at figuring out in order of importance, getting somebody set up, making sure that our everyday needs are met. And then from that end, how do we get into the market? How do we get in the workplace? How do we use all this intellectual and social capital we've built over 4 years to launch ourselves into the world around us?
Yeah, so I'm the follow-up. I know I'm supposed to be letting you go back into your corner so you can reload and come at me with a question. But let's say that an individual, they've got the job lined up. They've kind of got everything in order. And what they're really concerned with now is that they have student loans and they're wondering, do I invest or do I pay down my debt? What do you think?
I think you come up with a schedule to pay down your debt. And if you have extra, start an emergency fund. We always want to get our employer 401k match, but again, not if we have a 28% credit card debt, right?
Absolutely.
There's some exceptions to that.
Yep.
Grab the match, pay down your loans. I think that's pretty good universal advice for most people. Always an exception to the rule, but generally speaking, that's what we do.
That should just be the disclaimer for all of our comments, is that it always depends on the individual circumstances. But yeah,
all
absolutely.
Right, here we go. I'm 20. I'm working in college. I work at Jarlene's. I scoop that custard. I'm really good at it. I have good work ethic. It's a fun place to be. Should I do a Roth if I have a little extra money at the end of the year?
Yeah, so I think that, again, all of these it depends things, right? One of the things that students need to understand before, because this is a common question that students have, you must have earned income in order to contribute to a Roth. So the situation that you provide, this person is working, right? So they have earned income. But let's imagine that they weren't working and they just had, I've got $5,000 in the bank. I haven't worked. I haven't earned a penny this year.
No.
You actually can't contribute to the Roth IRA. Yeah, sadly.
Yeah.
So they have earned income. Now, the question of whether to invest in a Roth IRA or it's a traditional counterpart, right? The traditional versus Roth conversation really has everything to do with your current tax rate, the tax rate that you're subject to based on your income bracket, and the bracket that you imagine you will be in, or the tax rate that you will be subject to upon retirement. Now, we don't have a crystal ball. We can't see into the future. We don't really know for sure what's going to happen. But if I'm a betting man, I'm actually not a betting man, but if I were, and I'm looking to the future and I'm thinking I'm a student, I'm not earning that much money. My income tax rate right now is pretty low. I'm doing Roth all day. And Roth all day. The reason why is because I want to pay taxes while the tax rate is low or relatively low, or zero.
To be quite candid, if you're
making
zero. Under 15 a year working at General Lanes, you very well might not pay a penny.
That's right. That's right. And so zero is a pretty good tax rate to pay your taxes on.
I like that.
So I think for a lot of students who have earned income, I think Roth IRAs can make a whole lot of sense if, again, they have that emergency fund in place. They're not taking on more debt than they need to. They have some extra wiggle room. Sure, why not put some money in a Roth IRA? You're going to benefit from putting money in sooner rather than later.
All right, hit me. What do you got?
So I'm thinking about the investment landscape, right?
I love it.
A student, they find themselves, I don't want to set the bar too high, right? I don't think a lot of students are actually walking around with extra money that they can just throw out at some investments. So let's paint the picture again. So let's say they're graduated. They've checked all the boxes for the risk management side of things. So they've got, an emergency fund, they've got their insurance in order and all of those things. How the heck do you go about starting to invest? What are some of the tools? Now you brought up accounts, but let's talk about maybe some of the investment tools that are at their disposal that they might explore.
Well, I tell you one thing, let's not forget the robo-advisor, my friend.
I was going to bring that up.
Let's not forget the robo.
Yes,
so the
please.
robo-advisor, you can take $10 a month. You could take $10 a week. You could take $5 a week. And it turns out algorithms don't really care how much you invest. They don't really care about your commissions, right? Plug it in, fill out a risk tolerance questionnaire, take your $20, boom, $20, $20, $20. Next thing you know, you have 100. Next thing you know, you have 1,000. Next thing you have 10,000. There are easy tools out there aimed at people in their 20s. Robo-advisors maybe didn't get the popularity we thought they'd get, but I do think there's still sound tools to get people started investing today. I would go a step further and say that quite often if someone does have an extra $20, maybe throwing it in, early on isn't a bad idea. Even if you're not set up otherwise, it can be a good start. Big fan of that. You?
I love it. Well, I don't know if I can say this, but I use a robo-advisor myself.
You can
and
say
so
that.
You don't have to be young to use a robo-advisor, right? I mean, I'm relatively young speaking, but even with I work with a few clients and they too have their retirement assets in robo-advisor funds. I think that they are... So look, in my view, as I'm thinking about investing and how to invest, one of the most important things that I look at is fees. How expensive is it? How expensive are the underlying funds themselves? How expensive is it for an advisor or robo-advisor to manage? One of the things that robo-advisors get that they do really well, they keep those fees really, really low. That's important to me. I think that it has a long-term impact on fund performance. And you know what? I love automation. As much as I can get things on autopilot so I don't have to think about it every single month, I'm going to do it.
Well, I'm a big fan of that as well. All right, hit me. What you got? No, it's my turn, right?
I think it's your turn, yeah.
Okay. I live in the dorm. Do I need renter's insurance? I live in an apartment. Do I need renter's insurance? Do I need renter's insurance as a college student? Yes or no?
Yeah, so I think that the answer is a pretty clear yes, right? So risk management, unfortunately, doesn't get a lot of attention because it's not really as sexy as investing, right?
No.
If you're a college student, you're thinking about, I want to take this ACE 240 class. Probably the reason why you're taking it is because...
All about Bitcoin. I just want to know about Bitcoin.
Invest,
tell me all about
right?
the Bitcoin. Craig,
That's right.
Bitcoin. Teach me more about Bitcoin.
That's
anyway,
right.
I'm sorry.
That's
Go
right.
ahead.
Absolutely. And so, you want to go in there with those hot topic items, whether it's, stocks or Bitcoin, whatever the best performing stock is. Of course, Bitcoin is a topic that many students are interested in. But what's going to happen if you're in your apartment and it floods?
Or there's a fire.
Yep. Right? That's a bummer,
Those
right?
things happen.
Your landlord is going to have property and casualty coverage, right? They're going to have coverage, but that's not going to really protect your
it's not.
belongings, right? And so if you have belongings that would be a real bummer to lose and not be able to replace, then you need renter's insurance.
And renter's insurance is cheap.
That's
renter's
right.
insurance is very
That's
low
right. That's
cost,
the good
especially
news.
when you're starting out. And I would also add, quite often students might think, well, I'm covered under my parents' homeowner policy. You are, but the deductible of that policy may be more than all the stuff in your apartment, and they won't get paid anything. So renter's insurance, low cost. You're talking for a basic policy, $10 to $30 a month. If you can afford that, I think it's worth its weight in gold if something bad happens.
Yeah.
All right, that's my 2 cents. All right, last question. What do you
I
got
think
for
so. Well, okay. Well, let's get into the space of, well, I guess let's keep it in the risk management space,
Okay.
right? Let's talk a little bit about life insurance.
Life insurance.
Life insurance
All
can
right.
be really confusing. I
is.
think for a lot of reasons. One is because students, aren't super familiar with it to begin with, right? Can you give us just a high-level overview of what life insurance is and maybe some of the types of policies that might exist?
Sure. From a theoretical standpoint, life insurance protects the human capital of a life. So basically the earnings potential that life had if it were to be cut short. Fundamentally, at the end of the day, that is a primary use of life insurance for a young adult. All right. There's other uses as we get older, but a young adult, we're looking at protecting human capital. I was going to work from the time I was 22 until I was 80 or 60. Sorry about that. 22 to 60. And so if I drop dead at 25, then I can buy a asset that provides my family with a cash flow in the form of a present value.
Yeah.
And that is for a young adult, quite often where I see insurance. Okay. So to me, life insurance has a place. We get married, we start a family, we buy a house, we incur a debt. There's things that we use insurance for. Makes a ton of sense. Insurance, on the other hand, is a horrible investment vehicle. All right. It's expensive. It's bundled. There's underwriting charges. There's other charges associated with it. My preference in this world, let's start investing. Let's buy the right insurance coverage. Yes. And sophisticated estate planning. There's tons of opportunities to use some permanent policies. But if you're in your 20s, stick to buying a term policy for a period of time, protect your family, be done with it.
I love it.
That's Craig's 2 cents on it. All right.
Absolutely.
Last question, Donovan. Here we go. You ready?
Sure.
Ready?
Yes.
Bitcoin, love it, hate it. What do you got?
I continue to maintain that it's hard for me to see the investment purpose of Bitcoin. That being said, if I invested in like 5 years ago, man, I'd be doing great now, right?
Yeah.
And so I think that time is still going to tell. I don't think that we can make a definitive conclusion on Bitcoin or cryptocurrencies generally, where they're going to land. Do I have any money invested in Bitcoin? I do not myself. And I'm not recommending it to my clients either. I think that the future around cryptocurrencies and their investment purposes, I think the jury is still out there. What do you think, Dr. Lemoine?
It has price but not value. So does art. People buy art. So I'm not going to say at the end of the day, I think Bitcoin and cryptocurrency, I love the idea of a blockchain. I love the idea of permanent, anonymous, and at the same time public. I just love that concept, right?
Yeah.
That you know exactly who bought what when, and it's documented forever, and you don't necessarily know the people's names. I like that concept. I like it in title insurance. I like the idea that one day, property might trade that way too, right? I like this concept. I think there is price in cryptocurrency. I don't think we can deny that. The price is completely demand driven. So the more demand we have in the Bitcoin space, the higher the price goes up. There is no value in the Bitcoin space. There are no bonds, no dividends, no corporate revenues, no expectations. So I think of it like buying a piece of art. Some people may not. But I think you buy a piece of art, more people want the art value goes up. Fewer people want the art value goes down. That said, newer cryptocurrencies overwhelmingly have proven to be scams. I'd be very careful.
Yeah. Good
All right.
advice.
That's what I got. So
Thanks, Dr. Lemoine.
240 students, enjoy this conversation.
We'll see you in class.